Hi everyone, LJ Inaga here with LJ Realties, and this week I'm going to talk to you about the Smith Maneuver. This is going to be part 2 of our investment series. Now people ask, what is the Smith Maneuver? I felt the same way, and then I realized I'd actually been using it for the last 4 to 5 years. Smith Maneuver very simply allows you to take interest on your principal residence and make it tax deductible. Now there are very specific conditions that we have to respect for this. So first of all, you have to be doing this to create a business, invest in a property, create some sort of investment income, okay? And the way we separate this is typically you'll have, let's say, a lot of equity left in your property, and you say, okay, I want to take on a new mortgage, $200,000, $300,000, let's call it. And I want to use this specifically to purchase another building, to invest in potentially a dividend-paying stock, or because we have a new business idea opportunity. Now, when we do this, we are now eligible to write off the interest on the principal residence because we're actually taking this as a loan to this new business venture. That is the mechanism that is happening, and that's why we can now write off this interest because it's part of a business expense, if you will. You have to be very, very careful when doing this because even though I'm not an accountant, I know that CRA is very, very difficult and they like to track a lot of things. So if ever you do get audited, you have to make sure that all of your paperwork, kind of journal entries, and the whole tracking of it is very much done to a T in order to avoid any potential issues. You're going to have to be able to prove that the money really did go into that investment or into those dividends. If you can't, you say, well, I took out $250 for this and $50 I kind of used for a personal vehicle or anything else you might want, then you're really running the risk of getting into trouble with CRA. So please make sure to consult with your accountant first. What's really cool about this is that generally speaking, we can't write off any of the interest on our principal residence. And this allows you to tap into an equity source that most people have and have not tapped into and actually claim back that interest, which is one more tax deduction to bring down our interest. So the things that I recommend are cash flowing real estate, dividend paying stocks, or if you're a little bit more familiar with real estate, going and doing a BRRRR. And if you're not familiar with that, we're going to talk about it next week, and we'll go into more details about that. But that's a more labor and cash intensive real estate play, which I personally focus most of my investments on, okay? So that's the Smith Maneuver. I'm super excited to talk to you more about it if you have more questions and want to go more in depth. I love using it. I think it's a very interesting vehicle and allows us to grow our portfolio a little bit faster. If you're looking for more tips and tricks, be sure to follow us next week. Take care.